Life insurance. We offer life insurance to Oregon residents from a number of A-rated life insurance companies. Get free quotes for Oregon life insurance today. Protect your and your family's future. It's easy. Do you even need life insurance? Let's be honest. No one likes to talk about life insurance. It's not fun to talk about dying, but like taxes, death is an eventual certainty. And whether we prepare or not, these things will eventually come. Think about it. If something happens to you tomorrow, such as a car accident, heart attack, or a terminal illness, you will unfortunately leave behind debts, bills, and final expenses for your family to deal with. Home insurance, car insurance, and health insurance are the most common types of insurance people enroll in. One of the most important insurances for you to have is life insurance. Life insurance is a crucial step in planning for your future and the future of your loved ones. In the event of death, life insurance benefits are paid to your surviving spouse and family so they can live with less financial worry. The good news is, some life insurance policies not only provide a cash benefit from a policy, the death benefit when you pass away, but can also provide living benefits if you're diagnosed with some critical illness. Most carriers allow you to advance or collect up to 90% of your death benefit, the face amount, if you have a life-threatening heart attack, cancer, end-stage renal failure, or a major organ transplant. You have the freedom to use these living benefits or cash to help pay for your medical bills, everyday bills, debts, and even future expenses while you're recuperating. For more details, read here. Protecting yourself with life insurance can give you and your beneficiaries a certain amount of comfort and financial stability. If you have a machine that creates $5,000 a month, you would insure it in case something tragic like an accident happened or if it fell apart. That machine is you to your family. Once you're gone, your income is gone forever, but your family's daily expenses will continue for their lifetimes. Is life insurance expensive? Several factors are used to calculate rates for life insurance. Some insurers may give you an estimated quote based on your age. The younger you are, the less expensive coverage is. Gender, the policy type, and the amount of coverage you're seeking. Most plans require you to answer all the probing questions regarding your health history and submit to a physical exam. This is the reason why it is best to talk to a trusted life insurance consultant who can help you find affordable life insurance and assist you to work through all of the aspects of enrolling in life insurance. On average, how much does insurance cost per month? The life insurance company, policy type, coverage amount, length of term, gender, health status, and other characteristics all influence the premium when you get a quote. The typical male's monthly premium for $1 million of coverage is $48 at age 30, $73 at age 40, and $177 at age 50. Because women live longer and pay significantly lower rates, $1 million of coverage costs $37 for a 30-year-old woman, $53 for a 40-year-old woman, and $133 for a 50-year-old woman. How much life insurance should you ask for? A great start is to identify the expenses you will leave behind when you pass away. If you don't have dependents to care for, an insurance plan that covers funeral expenses, taxes, medical bills, and any other final expenses may be all you need. The most commonly used formula to calculate what you need in a life insurance policy is approximately 7 to 10 times your annual salary or the amount of your current debt and expenses. Types of insurance in Oregon. Term life insurance. This is a good choice for younger families when life insurance needs are the greatest. It's also very affordable for a high level of coverage or face amount and makes sense if your budget is tight. It provides protection for a specific period of time and pays a benefit only if you die during the term. This type of insurance makes sense when you have a need for coverage that may disappear at some specific point in time, like college education for your kids or your mortgage. Whole life insurance. This is permanent coverage for the rest of your life. It's a combination of life insurance with an investment fund. It pays a stated, fixed amount upon your death. Part of your premium goes towards building a cash value from investments of the insurance company, which are tax deferred each year. You keep the plan. And you can borrow against the cash accumulation fund without being taxed. The amount you pay usually does not change throughout the life of the policy. Universal life. This policy is a type of permanent insurance policy. It combines term insurance with a money market type investment that pays a market rate of return. To get a higher return, these plans usually change their rates over time. Variable life and variable universal life insurance. These are permanent policies with an investment fund tied to a stock or bond mutual fund investment. As such, returns are not guaranteed. Indexed Universal Life Insurance, IUL. This is permanent life insurance offering a death benefit protection. Like other forms of permanent life insurance, your premium payments may earn interest and grow the cash value of your plan. What differentiates IUL from other permanent life insurance is the way the interest is credited to the policy. In addition to the company offering its own declared interest rate, IUL also offers an interest option linked to the movement of a selected stock market index over a specific period of time. The manner in which the interest is calculated to your IUL policy gives you the potential for strong cash value accumulation. A key benefit is that it offers protection in a poorly performing market. With IUL, the credited interest rate is guaranteed to never be less than 0%. Life insurance with living benefits. This is a good choice if you want to have access to cash in times of difficulty while you're still living. If you face a qualifying chronic, critical, or terminal illness, you can use it to pay for care or treatment not covered by your health insurance plan, household expenses, or anything else you might need help with to deal with your medical and financial challenges. Term life insurance versus permanent life insurance. Term life insurance allows you to buy a high amount of coverage at a very low price. If you need a large insurance policy for your family, such as to cover college education, term life insurance is the better option. The main goal here is to have a lot of coverage during the years you need it most, with rates you can afford. However, the disadvantage of term plans is that they expire with no cash value. When you choose a permanent life insurance, you are purchasing a policy that is also an investment because it accumulates a cash value over time. In addition, the money you put in can be withdrawn or borrowed against at any time if the need arises, and it does not expire. The only disadvantage of permanent life insurance is the high rates, which are often not affordable for many. Let's compare term life, whole life, and universal life. How life insurance works. A life insurance policy has two key components, a death benefit and a premium. Term life insurance has these two components, but permanent or whole life insurance policies also have a cash value component. Death benefit. This is the amount of money guaranteed by the insurance company to the designated beneficiaries after the insured passes away. It's also known as the face value. For example, the insured could be a parent with their children as beneficiaries. The insured would determine the appropriate death benefit amount based on their beneficiaries' anticipated future requirements. The insurance company will determine if there is an insurable interest and if the prospective insured qualifies for coverage based on the business's underwriting standards for age, health, and any hazardous activities in which the proposed insured participates. Premiums. The money paid monthly by policyholders for insurance coverage is known as premiums. The insurer must pay a death benefit if the policyholder pays the required premiums. The premiums are partly determined by the possibility that the insurance will have to pay the policy's death benefit based on the insured's life expectancy. Life expectancy is influenced by the insured's age, gender, medical history, employment hazards, and high-risk hobbies. Cash value. The cash value of permanent life insurance serves two purposes. It's a tax-free savings account that the policyholder can use for as long as the insured person lives. Some rules may set restrictions on withdrawal depending on how the money will be used. For example, a policyholder may take out a loan against the policy's cash value and be responsible for the loan principal's interest. The policy's cash value can also be used to pay premiums or purchase additional coverage. The cash value is a living benefit the insurance company retains after the policyholder has died. If there are any outstanding debts against the cash value, the policy's death benefit would be reduced. How to choose the right insurance plan. Consider what expenses you would need to cover if you died. Mortgages, college tuition, and other loans, as well as funeral expenses, are all examples. Furthermore, income replacement is crucial if your spouse or loved ones would not be able to pay their living expenses on their own if your income were to go away. Internet calculators can help you calculate the lump sum that will cover any prospective charges. What affects the costs and premiums of life insurance? Age. This is the most important indicator of risk for the insurance firm. Gender. Women pay lower rates than men of the same age since they live longer on average. Smoking. Smokers are at risk for various health problems that can shorten life and raise risk-based premiums. Health conditions. Most policies include screening for health disorders such as heart disease, diabetes, cancer, and other medical metrics that can suggest risk. Lifestyle. Risky lifestyle can drive up premiums significantly. Family medical history. You have a much higher likelihood of having specific disorders if you have a history of serious illness in your immediate family. Talk to your trusted life insurance consultant. Health Plans in Oregon is a licensed insurance agency providing help to thousands of Oregonians since 2006. We offer help with different policies and life insurance quotes. Let us help you achieve the financial security you've always wanted.